Economics and Rate Strategy Treasury Refunding Highlights Analysis http://ntvforex.com News ID 213CFE85 2023 15:29 p.m. The key takeaway: the U.S. Treasury is terming out its record debt issuance as we expected, NBSP, but it is doing so much more quickly than we anticipated. Specifically, Treasury increased the sizes of the 2Y, 3Y, and 5Y auctions by $2 billion per month, such that monthly auctions in these tenors will be $6 billion bigger in October than they were in July. The 7Y note auction will be increased by $3 billion per month over the next 3 months, making the auction $9 billion bigger in October than in July. For the 10Y, 20Y, and 30Y, new and reopened auctions are set to increase by $6 billion, $5 billion, and $4 billion, respectively. TIPS auctions were left unchanged, although Treasury noted in its policy statement that it would closely monitor TIPS market conditions when considering how best to meet future financing needs. All told, the increases are particularly noteworthy at the long end of the curve. It appears that we were not the only ones who were surprised. The median primary dealer expected quarterly increases of $3 billion, $2 billion, and $3 billion for the 10, 20, and 30-year respectively, with increases applying to both new issues and reopenings. Given the highly uncertain fiscal outlook, we are somewhat surprised Treasury went with such aggressive moves to the auction schedule. Accurately estimating the Treasury's financing need remains the biggest question mark in the outlook. Our financing need estimate for the second half of 2020 is around $1.5 trillion. Treasury's projection for the same period is about $3.0 trillion, but this estimate assumes $1 trillion of borrowing in anticipation of additional fiscal legislation being passed, something our forecast does not explicitly incorporate. But even ignoring this extra $1 trillion in the Treasury's baseline scenario, our financing estimate is still approximately $500 billion lower than Treasury's number. If our baseline forecast for the financing need proves accurate, net T-bill issuance should be roughly $500 billion over the second half of the year, with additional declines likely in the first half of 2021. Instead, if the financing need ends up being closer to Treasury's estimate, second half net T-bill issuance should be close to $1 trillion. Note that both we and the Treasury assume the cash balance ends the year at $800 billion, so both of sets of projections account for a wind down of the elevated cash balance. In short, Treasury is playing it safe in its baseline borrowing plans, but the Treasury supply outlook over the next few months could change on a dime. Download the full report NBSP. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.